welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. So make it a great night, folks. Market-wise, let's take a look at it out here. We have the Dow Industrials down 23, NASDAQ up 4, S&Ps are flat. Gold contract down $6.20, trading at $1,165 an ounce. Silver off 6 cents at $16.04 an ounce. Platinum flat at $1,239 an ounce. Copper up a penny at $3.05 a pound. Light sweet crude down $2.27 at $78.27. We'll get back to that. That baby's got an ABC structure in it down to the 75 level. Bonds 10-year down 4 ticks at 126.07. 30-year off 4 at 140.31. King dollar up 389 ticks at 87.40. The euro's down 35 at 124.90, and the yen is up 1.47, 113.79. Our phone number is 877-927-6648. Give us a call, folks. I know what's going on in your world. In the world of the S&Ps, let's take a look at it. What do you have? Cash S&P 2017 we're at right now. We get the 2024, the 24 level. Well, first off, let's go back to Friday. Friday we go from 2001 to 2018. Some decent juice in it. You close over the high of the last few days, not over the high of the 2019.26, which was September 19th. Today, what do? You get over it slightly. You're right at it right now. Volume-wise out here, what we are going to be is it's going to be short volume. That makes sense, folks, after the amount of energy that the market took to basically come all the way back up to the highs. Dow Industrials. We take a look at the Dow Industrials. What you have with the Dow Industrials, Dow hit a high out here today of 17,410. You're at 17,369. And the 19th was the high of 350. That's the 350 is the number you're going to be looking at. NASDAQ Composite. What do you have with the Composite? Same setup in the Composite. Composite gets to a higher high out here today, 46.54. We're hanging at these highs. We're at 46.36 right now. SPY, the SPY. What do we have with the SPY? SPY is doing 71 million shares out here. What we did do on Friday is that you did 146 million, which was going into the 151. That's on the daily. On the weekly, what we had is that the weekly did 592 million going into 561. So bottom line is you got up into that 201.88 area. Today we hit 202.45, and you had some juice behind that move. The three Qs, the NDX 100. What do we have at the NDX 100? NDX 100 is up on 24 million shares today at a high. We hit 101.97. On the weekly basis, what we did is you got up with 194 million shares. That was going into 152. So the NASDAQ, the three Qs themselves, it's not an ABC up, because what you did is that you went down with way too much volume. So the definition of an ABC up would be that you could come down with volume, you go up with higher volume, you take the B point out. Make the case you took the B point out and have the volume, but you went down with way too much volume. When we went down, we came down with the first week of September 26th, we came down with 243 million. Following week, 229. Following week, 268. Following week, 424. First week up 2 weeks ago was 225, and then last week it had 194. 194 did take out that swing with juice. Gold contract. We're going to take a look at gold. What we have with gold is this. Gold hit a low of 1160.50 on Friday. We hit 1161 out here today. And what gold needs, folks, is first off to get back inside the range, meaning the higher range. That is about another $15 higher. It starts at 1183. That's actually $17 higher. The XAU and the HUI, when you take a look at the XAU and the HUI, if you take a look at the XAU first, now this is pretty intense actually, because what the XAU has done is this. XAU came into the lows of 2008, and it came into those lows slightly lighter volume, but guess what? That volume is so heavy it's going to get tested again. So last month we did 694 million shares. going into 693 million shares. You actually did a million shares more. The low of 2008 was 63.52. We hit 63.63. So you have a test. Test is on way too much volume. What that sets up is that the 63.63 of last month, I expect, will get tested out here. That's the XAU. Now, the HUI is a different animal, and this is where it's going to be interesting to see inside this correlation. The difference with the XAU and the HUI is that the HUI, they cannot sell forward gold. Well, I'll give you the exact definition, but it's within two. The exact definition. Okay, the index was designed to give investors significant exposure to near-term movements in gold price by including companies that do not hedge their gold production beyond 1 1/2 years. Okay, so that's the correlation. Correlation, when we take a look at what we did in the marketplace, this is how this goes. You had the test of 2008. However, you didn't get to the bottom, number one. What we did with the HUI is that we got down to a price point of 152.17. You did 442 million shares. The low was 150.27 with 528. So you can make the case that the HUI is stronger, and if that's the case, that the HUI is stronger, that's saying that the metal actually will start building cause to get to higher price. It's going to be, that battle there is going to continue. Why is that battle going to continue? Because if we go over to the dollar, what you have with the dollar is this. Dollar had taken out its highs on Friday. The highs that we're talking about was the October 3rd high is 86.87. We did that on Friday, and you're above that price right now. And if this is going to be a leg up, we'll see what type of follow-through that we're looking at. If we take a look at the continuous contract, what has been out here for quite a while in the dollar is this. And this is like, I guess, without a retracement. The dollar hasn't really retraced at all. Your swing points on the dollar go like this. 88.80 is your swing that was established June of 2010. Then you're dealing with 89, and you're so close to it, it wants to whack one of these swings. So we'll see how it comes into them. We've hit 87.54 thus far. Bond market. Bonds still continue to not go south. You've drifted lower. 10-year bond out here today down 4 ticks. We're trading out at 126.07. But what you're doing, you're coming down with dramatically lighter volume. We've only done 1 million shares out here, 1 million contracts rather. And that 1 million contracts is coming into 2.2 million. That says that 10-year still wants higher price. 10 years yielding out here 2.351 right now. 30-year bond. We take a look at the 30-year bond. Same type of setup on the 30. 30 actually is stronger than the 10. 30, 294,000 contracts out here today. You're at 140.31, and that's coming into 574,000 contracts. So it's a big number, and that bond market is still saying, no matter what we have out here, bonds still want higher price. Euro. We're going to take a look at the euro out here. Euro is trading at a price point of 124.93, and it almost looks like the euro wants to basically do a little counter trend bounce here. The euro only has to go up 6 more ticks to get back inside where it dropped out of last Friday. If you get back inside there, that would be saying, okay, you go to the other side of the range, which would be 128.86. What that would do, that would be saying that the dollar wants to back off a bit. That would be saying that commodities want to go up. Oil. Let's go over to the oil market. So, oil cracked out here today, and you crack with some juice behind it. We've done 355,000 contracts thus far. This is an ABC down. Your A point on oil is 93. Your B is lining up at 80. That's $13. And that's going to give us, this is even heavier. That gives us $70 oil, folks. A to B equals C to D is $70. Pretty amazing. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Dow Industrials are down 27. Nasdaq's up 4. S&P's are flat. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Some of the high-volume stocks in this low-volume market. We have, let's see, Apple's up $1.18. You have Twitter down $1.20. Freeport McMoran is off 63 cents. You get Gilead Science off $2. Take a look at some of the Dow stocks out here. We have Caterpillar's off $1.46. You get Oxy down 179. GM is down 20. You get Walmart off 10 cents. Let's see. JP Morgan is up 38 cents. We go to the XLE. We take a look at what's happening with the XLE. XLE right now is down $1.30, trading out at 86.12. And what she had done today, she got over the highs, right into ice, got to a price point of 88.41, gave it up. That's saying that she's going to make that run down into this 80.77 mark. That 80.77 mark, that's the high of the low. The low is 77.51. If we go over and we take a look at ExxonMobil, since that's the largest weighting structure inside of it, and same setup in ExxonMobil. Exxon got to a price point today of $97.10, gave it up, went to ice. Now we'll see how she handles the 90.61 level. That level, CVX. Let's go take a look at Chevron, since Chevron is the second. Yeah, there you go. Oh, Chevron's getting hit. This is interesting. So Chevron's down a couple percent. Chevron is down 320, 116. That's the second largest weighting inside that XLE. But she's done 7.5 million shares thus far today. She had done 10 on Friday, coming up to ice, giving it up. We put this back. See, these both are still in an ABC structure on the way down. Chevron has gone from 135 to 106. That's a big number. Well, that's 24.8 to B, which could line that baby up at about $100. And when you do bring that back at 100.66, you get a high volume low that's out there. We go back to Exxon for a second. We take a look at Exxon. We'll put this on a weekly basis also. That's a big number too. Yeah. So your A point on Exxon is 104. Your B is 86. 96. Well, you got $18. Your C is out here at the 97. So you're talking about $80. And $80 is the bottom of the range. Actually, 84 is the bottom of that range. But you also have let me put this on a monthly for a second. Yeah, Exxon has a high volume low and high at 81, 81.18. What's going to be wild about let's look at the rest of the commodities for a second. So inside the commodity market out here, crude oil is your biggest mover down, 2.7%. Soybeans are off 1.8. You get gasoline. So check, this is going to be amazing. So gasoline right now, folks, wholesale's at 2.11. Heating oil is at 2.48. And if we go over to the gasoline market for a second, because this is a race for everyone, there's no doubt. And you can see it hitting the pumps right now, too, even the high test. So we're at 2.11, and the gasoline looks like it wants to break out the bottom again. This would be amazing if it breaks out the bottom again, does another ABC down. The reason being, 2.46 is your A point, and 2.07, so you're talking 40 cents, which would get you, this is going to be it, which would get you to a 180 wholesale unleaded gas market. That's pretty intense. That would bring down some numbers in a huge way. If we do stay with that oil complex for a second. So inside that oil complex, they're getting hit. You get Exxon down $1.40, Chevron $3.20, Schlumberger $2.16, Oxy $1.75. Big numbers. Okay, so now let's go over to the financials. J.P. Morgan right now is up 36. You get Bank of America up 12. BRK, since that's the Berkshire Hathaway is the largest weighting structure inside the XLF. That's up 53 cents. She's hanging at the highs. Berkshire Hathaway had some juice on Friday, 5.7 million shares at the 140-152. That's saying it's going to get tested again. And that's not the first time. Yet Friday, Berkshire Hathaway was testing its high volume high from September 19th. That high is 142.45. The low is 140.30 of that day. But it looks like Berkshire Hathaway, no doubt, wants to get that tested once again. We go take a look at the Alibaba. Alibaba's got some juice underneath it. Alibaba looks like it's going to go test the highs of the first day of trading. Well, it's actually over that, because the highs of the first day of trading, well, it looks like to me, was 99.70. Ended up closing at 93. Right now you're at 102.43, and 102.43. This is going to be wild watching this, okay? Because Alibaba started trading September 19th, which we thought it may have called the top of the market, but it's not. It's not because we're at a higher high. A point on Alibaba, 82. B is 100. This very well could be an ABC structure on the way up. And if it is, you got, well, let's do it. 82, 100, you get 18 bucks, which would put it at 116. And because you are taking a B point out today with volume, even though it's only, we've done 33.9 million shares, and it's taken out 32.1. And when you take these highs out, folks, okay, the quicker that you get away from the top of the range, the more acceleration whether it's Alibaba or the market in general. If we go over to the SPY for a second and we take a look at what you have happening here, the SPY itself has to get away from these highs. What we had is this. The highs that we're talking about is the highs all the way from the 26th of August, coming all the way to September 21st. You're up there, goosed them for 2 days, then gave it up. We got up above them Friday. We're up above them today. They're going to basically close about sideways. If this is going to make another leg up, it's got to get up and out of here pronto. And what I do expect, we have out here today, this is the last day of window dressing. Tomorrow's the elections. We'll see what type of volatility the market brings in. If we do go over to Europe, we take a look at the FTSE first. FTSE didn't have any juice out here today. FTSE not only did not got to its highs. The high in the FTSE out here is 6,900. Friday it got up to 65. It gave that up 58 points today. We'll go to the DAX in Germany. DAX in Germany did the same deal. So it's intriguing that our markets could make it up there. Those markets not only didn't make it up there, both of those did sell off today when our markets basically have stayed flat. The FTSE was down 0.8%. France was down 0.9, and you had the DAX down 0.8 also. Asia was flat. You had we were flat in Asia. A couple of markets were closed last night, actually. The Nikkei was closed last night. The yen continues higher price in a big way, too. That means higher price, weaker yen. We at 113.74. The yen on Friday went from 109 to 111. And what that's going to do, no doubt, is continue to put juice behind the Nikkei. The less expensive, the weaker the yen gets, the stronger the dollar gets, weaker the yen gets, more exports are happening out of Japan to the rest of the world. This is Tom O'Brien. This is TFNN. Dow Industrials right now down 45. Nasdaq's off 3. S&Ps are off 3.5. We're going to be right back, folks. Stay right there.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are down 34. NASDAQ is flat. S&Ps are off $1.50. I do want to wish our man Al, our producer here at TFNN, a great happy birthday. Make it a great year, Al. Big time. It's a beautiful thing. He's cranking it out in here, folks. Him and Steve, no doubt. Okay, so we take a look at the dollar. The dollar index right now, folks, and this is what's pretty wild. You know, the index itself has been on a tear. The tear that it's been on, it's gone from 79.95 up to this 87.39. Now, the swing points that it's going after, the 89 level. What's going to be intriguing here is this, is that, you know, years ago when you looked at the dollar goes higher, bottom line, market went lower. In this particular case, you got a consolidation going sideways, but the longer term for the dollar and the market is they both went up. So the real key is going to be, okay, what flies when this swing point gets hit? You know, is that going to be hit, counter trend bounce, moves off it, and then regains the lost space, or do you make a larger retracement? It's going to be wild watching it shake out, because what you absolutely have now is this. Gold itself, the price is holding. What you have in that gold market, however, is that when it broke the swing of last year, which we broke, you're coming into and you're trading. When we broke that June 2013 swing point, which is 1179, where you're trading out, folks, okay, is into the 2009 levels. So you're taking a tail in, was 14. So we're dealing with 5 years ago. The top of that bar is the 1195 area. The bottom of that bar is 1042. That's the danger point. That's the danger point in a big way. Now, we certainly haven't moved away from the range that it's been in, meaning 1179. But it's that crucial, because if you do move down, I'd say even another $10 from here, that's going to open up. It's going to open up a heavy spike into the lower levels. That spike would be the correlation of the dollar index getting to this 89 right now. Those two correlations are something you want to keep your eye on in a big way. The oil correlation, it looks to me like the oil correlation goes like this. You had, I think Saudi Arabia brought their prices down again today. That's, okay, so West Texas Intermediate dropped to the lowest level in more than 2 years after Saudi Arabia reduced the cost of its oil to U.S. customers in the face of soaring North American output. That's what's going on. Futures tumbled 2.2%. In New York, Saudi Arabia oil cut prices for all grades to the U.S., the company said today in an email statement. The state-owned producer, known as Saudi Aramco, will sell Saudi light to clients in Asia for 10 cents less than the Middle East benchmarks, down from a November discount of $1.05. U.S. crude imports from Saudi fell to their 4-year low last month. The Saudi move speaks to them wanting to preserve market share in the U.S. where it slipped recently. Bottom line is that we're going to be buying gasoline, heating oil at a lot cheaper price, folks, okay? So I don't necessarily think the correlation inside the oil market has to do with the dollar, but we get it both ways, meaning with a higher dollar, lower price of oil in general, those dollars are worth some money. Inside the gold market, what you do have is that to get gold out of the ground, it certainly can spike lower than what you get it out of the ground for. Out of the ground, getting it into hands is basically 1179. 1179, 1180. Right now we're at 1166. The longer you stay under that price point on any commodity, what does it do? What it does specifically is basically closes mines. If we go over to AU, which is Anglo-Ashanti, this got some juice underneath it today. It's up $1.81. We'll see whether it can do anything. This is a stock this is John Paulson's largest holding. This stock has just got like smoked. Stock had gone from $47 down to $9, $8.07. What they're doing, they're going to move some assets. The amazing part, though, and here, check this out. So AngloGold put mines up for sale as the world's third largest gold producer cuts debt after shareholders balked at a $2.1 billion share sale. The company plans to cut borrowing costs through self-help measures such as reducing operating expenses and increasing output. We may also consider a sale or joint venture of what operating assets for value, he said. People ask us, what do you mean value? It basically means the shop isn't open for bargain hunters. That quote there, the shop isn't open for bargain hunters. Folks, the shop is wide open for bargain hunters. Gold's at a low. All these shares are at a low. That's when you sell. That's when you don't want to sell. It's not even close. And they're claiming that it's not open for bargain hunters. That's unfortunately the way that it does go. And yeah, their mines, their largest problem, and this had been, folks, the largest bankruptcy right before gold took off in 2001. It was called Ashanti. What their problem is that they have these mines that are so deep and so expensive that they're just too expensive to get gold out of the ground. They're miles and miles deep. Rand. If we go take a look at the the rand dollar, because that correlation is there. Yeah, the rand dollar's at 11. And unfortunately, these miners haven't been able to make money with the rand dollar 11. That's a big number. That rand dollar at 11, they should be making big money. Why? Their expenses are in rand dollars. They're getting paid in U.S. dollars for their gold. So we'll see where AU does shake out. Paulson, as of the last filing, still owns a huge amount. I think it was 26 million shares. I have the right one. There it is. Yeah, 26 million shares. 26 million. He owns 6.59% of the company. So it's a big number. I'm sure he's a little happier today. But bottom line is that he has to get to much higher price. We take a look at the small caps. Now, the small caps, what the small caps haven't done is got up to the high. And the small caps in particular were the first indice this is, to make a high. First high that was generated right at the beginning of the year was the March 7th. You got the IWM got to 120.58. Then it tested that area on July. It got to 120.97. And last week we only made it up to 116.96. Now we got over to 117 today, but it's already underneath that. It's right now you're at 115.94. And what you do have with the small caps, as the other indices, the difference is that the small caps, this would be the third lower high, and in the small caps we have two lower lows. So that is telling you that the small caps continue to be the weakest. And what does also happen there, inside the small caps, there's a lot of commodity stocks, commodity-related stocks inside of that. And it was a question, Tom, you expect IWM to make a high? Is there volume at the high? No, I don't. I don't expect it. You know, the IWM is kind of like, if we go over to Amazon for a second, it's almost like Amazon. Amazon, at the high in Amazon, let's just pull this up, was at the beginning of the year, I believe. Yeah, it was. The high was in January. High was 406. You're at 305. Amazon had some nice counter-trend bounce. You know, Amazon went from 408 down to 337, got all the way back up to 383, moved down to 284, got all the way back up to 364, moved down to 304, got back up to 349. Now it's dealing with 305. And, you know, Amazon's just building cars to get into lower price. Numbers already come out in Amazon, so the next number coming out in Amazon is not going to be until after the holidays, after Christmas. And there's no doubt that the amount of orders that are online will be astronomical this year. The online, folks, there are no two ways about shopping online. You know, you're just going to see that continue to get larger and larger and larger. With that in mind, let's go take a look at UPS, because those businesses, UPS right now is up 67 cents at 105. That is at its high of the last 6 months. Also at the high. Now, this has been consolidating. This is pretty intense, actually. Been consolidating since October of 2013. And, you know, last week we were pushing into that high with volume. This looks like there's going to be some juice behind this move. That's on the weekly. We put this on a 10-year monthly. And I put it on a 15-year monthly. Yeah, on a 15-year monthly, she also has some juice. This is a high-end consolidation that does look like it wants to go higher. FDX, let's go to Federal Express. Federal Express is trading 167. You stay right there, folks. We're coming right back. Dow Industrials right now down 33. Nasdaq's up 1. S&Ps are off 3. We get gold down 540. Silver off 11 cents. Oil down 220 at 78.34. We're going to be right back, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow Industrials right now are off 33. Nasdaq's up 3. S&P's down $1.50. And if we go over and we take a look at the structure, first inside the 3 Qs, what you have is this. Well, first off, was putting juice into the NDX 100 today. You had Western Digital was up 233 at $100.72. You had Charter Communications up 330 at 161. Seagate Technology. So Western Digital, Seagate, they're hard disk drive makers. Let's go back to Seagate just for a second and see what that's looking like. Okay, so this is taking out a high and taking it out with some juice. The swing high up there is 1.1 million. It looks like it's going to end up doing that. We're at 1,037,000 right now. We put this on a monthly basis, and she's pushing it to highs with volume. It's going to be interesting because we did last month 28 million going into 28. It was going to 28.8, and we did 28.8 home. So this is the month. That's pretty wild. We go take a look. Taken away from the NDX 100 today, you had Trip Advisor that's down 349. Gilead was off 191. Facebook was down $1, and you had Netflix off 484. Netflix is trading out here at a price point of 387. Let's get to Brent in Martinez, California. Hey, Brent, what's going on?
Hey, Tom, how are you today?
I'm doing great. You having a good day out there?
I am, thank you.
Cool.
I was calling about, I was just going through my watch list of the different gold and silver stocks.
Yes.
And I was surprised on a day when gold and silver themselves are not doing a whole lot, but you have Royal Gold up, probably over 6%, Great Panther over 8%. Just wondered your thoughts on it.
There's no doubt that they got some juice. Royal Gold right now, I like what Royals has done. Royal is at $61. That's up almost $4. It got right back inside the range that it broke down on Friday from. We blew that swing point away. The swing point we're talking about, folks, is May 28th. That was 58.86. Gets down there, and now you're right back above it. Now, when you're back above it, that means it wants to go to the other side of it, meaning 69.30. FNV, if we go to Franco-Nevada, we take a look at Franco-Nevada, it's done the same thing. Franco-Nevada broke out its low of 45. We got down to a price point of 45.07. Today you're at 48. What I do want to see, Great Panther, same deal. Great Panther hasn't got back inside the range yet, though. It would need another 10 cents. What also went there is Rango Resources. Rango Resources wasn't bad. In that context, Brent, what I would like to see is another nice day of strength. Well, what we really need is this. We need a day of strength inside the gold market. That's what we need. That's the danger point, that they thrusted, or not they, but that it thrust down another leg. As to fundamentally, we're at a price point right now that companies need that price point to get it out of the ground. But there's no doubt there's a really good sign of strength in a few of these gold stocks out here today. There's no doubt. I'd like to see another one. When you do get back inside the range, though, which Royal Gold is saying, Royal Gold did, so did Franco-Nevada, that is an aspect that the metal itself, because Franco-Nevada, folks, and Royal Gold would be the two gold equities that would tell you the most amount of information about the actual metal itself, because both of them depend on the price of the metal inside their business plan as to where it's going. So we get another day of strength, and then what you'd have there is that was totally a false break downtown. I don't know if you heard me a little bit earlier. The correlation inside the XAU and the HUI is concerning. The reason being is that the HUI was good. HUI tested the 2008 low, did it on about 20% lighter volume. The XAU didn't, though. So what that would be saying is that the XAU folks can sell forward gold, And, of course, if they're selling for gold right now at $11.65 and gold goes up, what ends up happening is that they lose a lot of money, you know. So we get a start, but now they got to prove themselves, Brent.
Yeah, there was a day, if you go back into October, it's probably on the 8th or something, where there's that big day in GDX.
Yes.
By 100 million shares, but then it didn't really follow through. It just kind of gave it all back up. So
that's right, and that's the danger point. Now, what Brent just brought up, folks, and this is what I've found, not just in gold, but those are the danger points after you had such a downdraft, right? That you get a sign of strength, you get some juice going, but they don't make it to their swing point. That's the crucial part. That's when we're going to know whether they talk, walk, and squawk. You know, you take a swing out with volume, then you got some action. And, of course, inside that market right now, that's quite a while. I wouldn't wait for the swings just to get into them, okay? But that's going to be a telling sign. Can you have more than just, a push forward and then you give it up again versus taking a swing point out? Like if we take a look at Rango Resources, you're at 60. Well, the first swing is not until 70. If we go to Royal Gold, that might be a better indication. Well, it's the same deal. Royal Gold's at 61. Your first swing isn't until 69. But it looks like it wants to go for it. Royal Gold's strong out here. And if we pull this back, let me just see something. So on a monthly, yeah, this is strong. That's interesting. So on a monthly, this never even made it to the swing low of June of 2013. What it did is made it to the top of it and rejected it. I like it. Yeah, we made it. It got to 55.55, and the top of the low is 56.88. It hit it. It took off out of there, and that's saying, okay, now it's going to go after 73.49. So.
All right, I know that hours about up. If you get a chance, I know we kind of talked about natural gas.
Absolutely. I'll do it right at the beginning.
Okay.
Okay, man.
All right. Thanks a lot, Tom.
Have a great one, man. Have a safe one. You do have natural gas up today. Look at that. It's up 4%. Man, it's freezing up north, too, folks. I was talking to my daughter in Boston yesterday. They had snowflowers. That's the beginning of a very chilly winter if you getting snowflowers in Boston on November 2nd. Pretty amazing. I guess it's going to get warmer. Natural gas, this natural gas also popped back inside its range. So this is pretty cool, actually, looking at natural gas, man. Reason being is that you're dealing with the November 8th low, which was 373. Stayed down there for 2 days, popped on the other side. Can't bust them down. Guess what? You're going to go bust them up. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back with, of course, Tigers, Amy Smith, and Chad Coker from TD Ameritrade. Dow Industrials are down 24. Nasdaq's up 8. S&Ps are off 2.5. We're going to be right back. Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote is by Richard Bach. To bring anything into your life, imagine that is already there. Market-wise, let's take a look at it out here. We had the Dow Industrials down 24, Nasdaq up 8, S&Ps are flat, gold contract down $5.50, trading at $1,166 an ounce. Silver up 2 pennies at $16.13 an ounce. Platinum up $1 at $1,239 an ounce. Copper flat at $3.06 a pound. Light sweet crude gets down through the $80 level. Looks like it's an ABC structure in the way down to 70. Right now, it's down 220 at 78.34. Bonds, you had the 10-year down 2 ticks, 126.09, 30-year flat at 141.03. And each one of those bonds, folks, bottom line, have pulled back. They get lighter volume. They're rejecting lower price, do it on lighter volume. This bond market looks, once again, that it wants to go topside. The 10-year yield right now is 2.3. And the high spikes that we had from the October 15th level is still up there, meaning they have a high volume high. That's going to get tested. King dollar. King dollar just does not want to give it up. We'll see how much higher it can actually get out here. 89 is the swing point on King Dollar. Right now, you're at 87.42, and you know, it got over the highs last week on Friday of the October 15th level, October 3rd level rather. That high there was 86.87. If we go over to the gold market, that correlation is there. Inside the gold market, what we have, gold market out here, looks like it's, if we got to the, we didn't get to 1160 today. We got to 1161. The low of Friday is 1160.50. Had light volume, had 122,000 contracts. Bottom line, gold needs a sign of strength to get into higher price. What we did have out here, we just talked with our man Brent from Martinez, California in the last hour. There's no doubt some of these gold equities actually moved, and, you know, Franco-Nevada, Royal Gold, they moved the wide price spread, accelerated volume. And both of those equities themselves are an indication that the physical price of gold wants to go higher, because both of those businesses are predicated only on their royalty companies. The higher price that gold gets to, the more money that they make, period. That's how both of those companies run. Bonds. Now, let's go over to that bond market. So we'll start with the 10-year. We take a look at the 10-year. What we have with the 10-year out here is that that got to 125.30 today. You did 1 million contracts. It's going into 2 million contracts, and they just can't seem to keep bonds down. And in that aspect, folks, the reality would be that bonds should be a lot lower, meaning higher yield, as that market has taken off. Sprint just come out with numbers after the close out here. Sprint closed at $6.20. That is trading at $5.87. Let's see what Sprint has to say. Okay, so second quarter, the estimate, man, they missed some big numbers. The estimate was 1.66 billion. They came in with 1.39 billion. That's a big miss. There's no doubt about it. It's trading out at the 580 level, and what that's going to be doing, let's see, 571. We put this on a weekly, monthly. Yeah, she's gonna. She doesn't have to go for 536. Well, her 536 is the low. We'll see whether she's going to go after that or not. AIG just come out with numbers. AIG closed at $53.80. That is trading at $54.33. Numbers on AIG go like this. The estimate was $1.09. They took in $1.21. Big numbers on AIG. And what you do have happening, of course, with AIG is that the trial is going on right now, and it looks like the government very well may lose that trial, folks. So it's going to be wild watching that whole thing shake out. And what that trial is all about is about $28 billion that the Hank Greenberg figures that the government basically confiscated off the shareholders. So we'll see where that does shake out. But if you've been following that trial, they've between Bernanke, Gettner, Paulson, all these guys have been up there, and most of them, just like every trial with high-profile folks in it, their memory gets lost. There's no doubt. You know, it's a mind-blower. There's no doubt. It's the same over and over again, and, you know, I mean, that's just the way it goes. But the bottom line is that it is amazing that I can't recall. The I can't recall is over and over and over again, and I guess it worked. Well, no, it does work. Not that I guess it works. It does work, you know. So you got to be smart when you're on those stands. There's no doubt about it. And they seem to. It seems that the AI that Greenberg's lawyer has got a few basically facts out of a few different government officials that will hurt their case going forward. But I suspect that's only going to take a few more weeks, and we'll see where that whole thing shakes out. Some of the high-volume stocks out here today, what you had Facebook down $1.11. GE was off 11 cents. You had Twitter down 126. Yahoo was up 26. GoPro is up 722. Let's go over to Yahoo for a second, because what you do have is that Yahoo is still one of the largest owners of the Alibaba, and Alibaba took out a B point today, took it out with volume, so Alibaba could be doing ABC structure on the way up. Let's see here. So, yeah, I mean, you know, Yahoo very well could be an ABC up too. Unbelievable. 23, 33, 18. Well, 18 gets Alibaba $50, and what we do have is that Alibaba is going to be coming out with their numbers tomorrow morning before the market. What Alibaba did out here today, you're at 101.80, and Alibaba did 40 million shares that took out that B point of 100.67, which had 32 million. So your A point on Alibaba is 82, and your B is 100. $18. Your C is 96. So that gives you what? 96, 106, 116, 114. It's going to be interesting watching how that baby does shake out. The XLE, the energy sector in general, folks, is having a tough time. You had Exxon down 147 today, Chevron off 317, Schlumberger down $2. As oil has broken lows, it's just not the breaking of lows in oil. What you have is that as in fact you're breaking lows, Saudi Arabia comes out and brought down the prices of all oil products into the United States. Why? Because what they're doing is that Saudi is losing market share to the producers in the U.S. And the last thing they want to do is lose market share. Why? Because what ends up happening, you start picking up the phone and calling someone else, calling different companies. It's a lot easier to do. So you have the breakdown in the actual contract, CLZ, the CLZ for what we did with the contract itself is down 231, 366,000 contracts. That's an ABC structure on the way down. Broke the B point. B point out here had 260,000 contracts. That sets up a $70 oil price. Inside the gasoline market, it's pretty intense. The wholesale gasoline market right now is 211. You have an ABC structure on the way down. This one hasn't broken the B yet, but it looks like it's going to go after it tomorrow. That structure there is going to give you $1.78. A to B equals C to D. That's $1.78. If we get down to $1.78 on the gasoline structure, folks, what you're going to end up seeing is that you're going to end up seeing probably $1.70. You're going to end up seeing like $2.40, not just under $3. $2.40, $2.45. This is Tom O'Brien. This is TFNN. Dow Industrials finished down 24. NASDAQ up 8. S&Ps are flat. You stay right there, folks. Tigress. Amy Smith is coming up from IBD.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials finished down 24. NASDAQ goes up 8. S&Ps were flat. And as they do every Monday at 20 past the second hour, we have our Tigress, Amy Smith from Investor Business Daily. And, folks, if you haven't test drove either the digital edition at investors.com or the print edition, Investor Business Daily, come over to our website at TFNN. You can see on the right-hand side is the banner. Hit that banner. You can take the choice, get it delivered every trading day right to your house, including Saturdays for the Monday edition for 2 weeks, or the digital edition. And, of course, if you're in front of a computer, which most of us are, the digital is a great service, folks, because there's many more things on their website that can help you each and every trading day. Amy Smith, what's going on?
Hey, Mr. Tom. Good. I'm great. How are you guys doing in Florida?
Well, let's see. We got a cold front yesterday. No, Saturday. And it got to be 60, but it's 74 now. So.
Well, that's not too bad.
No, it's beautiful. It's beautiful.
Yeah, that's great.
I was talking to my daughter in Boston, though, and they had snow flurries, and it was 30 degrees Saturday. That's cold.
Oh, my goodness.
That's cold.
They're starting into it. That's when you wake up and you go, oh, winter's coming.
That's a fact, no doubt. So you were out in Scottsdale doing an advanced workshop.
I was, and I thought of you because you're the water guy. Don't you have a lot of water toys, don't you?
Oh, yeah. Yes.
Okay, well, this would have been right up your alley. They had this, it's a flow rider.
Okay.
It's basically a wave simulator, so it's like you're surfing. But what they do is they have, it's obvious, it's on land. This is a fake thing. So there's two jets that push like 30,000 gallons of water up.
Okay.
So you surf down it, and about 20 feet or something, and then the water pushes you back up again. So you get to surf down,
That's pretty
go back
cool.
up, surf down, go back up, or you can bodyboard. It's so cute.
Did you do it?
I didn't do. There were so many kids in line.
Okay.
There was like a long line, and I'm
I
working,
bet.
and
Right.
but if there'd been a shorter line, I definitely would have tried it out.
Right.
Yeah.
So
Very
what
cute.
was? Let me ask you until we get into the stocks. What was the take on the folks that were at the workshop?
I think everybody was cautiously optimistic. I think
Okay.
at some point, people just can't deny what they're seeing.
Yeah.
They say, like, well, okay, the indexes keep going higher.
Just went to the moon,
stocks,
yep.
And stocks keep breaking out. And we've had some misses on earnings, but basically the market just seems to want to charge higher, so it's kind of hard to argue with it.
Yeah. Now, I know you put down here that we had the equivalent of 3 follow-through days on the major indices, right?
Yeah, so that's just like thinking of it as just 3 heavy moves in the market.
Yeah, right.
Compared to the follow-through day we had before this, that was 1%. That was the move. It was nothing.
Sure.
This time, we had these bigger moves, and not only did we have the very first day the NASDAQ was up, 2.3%, the S&P was up 1.9%, but then we've had 2 more since then. Even on Friday, the NASDAQ was up 1.4%, the S&P and the Dow moved up 1.4%, and then 1.2% respectively. So it's this kind of, when you see that kind of power and you see higher volume coming into it, it's hard to argue with it. Of course, Friday, a lot of that was because we got Japanese, quantitative easing coming in.
Right, and just in that same context, I mean, it's the same thing. It doesn't matter what it is. If you go to a higher highs, you're going. Right, period. Right.
Yeah, it's kind of hard that when you look at the chart and you see the higher highs and you see everything approaching, all-time highs, it's and not only that, but what we saw breadth from a lot of different industry groups, and that tends to give you more confidence. Although I will say, an awful lot of medical stuff. I think if you and I have talked about this till we're kind of blue in the face, but the medicals, the pharmaceuticals, the biotechs, those are just going bonanza.
Yeah, no doubt. Now when we take a look at the buybacks, talk to me about the buybacks coming into the end of the year.
Well, this is really telling. If the companies are willing to stick their necks out and buy back their shares. Goldman Sachs said that companies are now free to buy back shares. It's in 5 weeks before the earnings are released. So
Okay.
most of the third quarter earnings are out.
Yeah.
Means those corporations can now begin to buy their own shares. And since 2007, 25% of corporate buybacks occurred in the last 2 months of the year. So you're seeing these stocks do well. The companies feel they're going strong, going forward, and they're buying their own shares back. And it doesn't get much more confident, as far as you taking a look at the market. That's confidence in the market right there.
Yeah, it's the same thing that inside their equity. You buy it, you can prop it up, and there's no doubt about that.
Sure.
So we have Alibaba tomorrow morning, right?
We do. The stock was up 3% again today,
I
Tom.
know, with juice, right?
With some juice on it, got
Yeah.
some heat on it. It's hard to deny this one. Obviously that Oppenheimer report last week set it on fire. They said that, that it could be more than half the people in China are not even on Alibaba yet. So, it's the Amazon, the PayPal, the eBay of China. Jeffrey said it could hit this huge price target. And, a lot of people order products in China via their phones rather
Sure.
than traditional mall shopping.
Sure.
So we're going to have to see. The stakes are high tomorrow morning before the open. I would guess it's going to be hard for them to disappoint. I think they
I
come
agree.
public.
Yeah. No, I know.
I think they're going to hit it. I do.
Oh, you listen. I think once they come in the United States, Amazon, eBay, a few of these companies are going to have a big problem. Period. I mean,
Well, I do too. And he's got $23 billion from the IPO, from raising the money. That's a lot of other companies you can come in and buy.
there's no doubt.
Yeah.
No doubt about that. With some earnings coming out, so we got Priceline's a big one. Oh, and Jazz Pharmaceutical too, right? Okay.
That's another big one too. And I don't know if you have the Fiesta Restaurant Group down in Florida. They're Taco Cabana and Pollo Tropicals. They're mostly in the South, these restaurants. And we got Burger King. So we've got those coming up. People tend to eat. Right, Priceline's going to be a big one. It's been a little bit weaker lately, so we'll have to see. Jazz Pharmaceuticals is kind of setting up.
Yeah. It's wild. This El Polo Loco. Well, you know what this reminds me of? This is wicked. For some reason, folks, every time I see this, if you watch Breaking Bad...
Yeah, it's El Pollo Hermano.
Yeah, it's like, man, they should have realized that they should have named this something different or something if they're watching Breaking Bad. It's like, oh, man, is this the crack? No, they weren't selling crack. What are they selling? Speed, right? Yeah, meth. That's right.
Methamphetamine.
Yeah, meth, right, exactly.
Yes, methamphetamine. Well, it's funny. El Pollo Loco's been around for a while, so I think the joke was on Breaking Bad. They named it kind of, El Pollo Hermanos,
I see, okay.
What is it, the Chicken Brothers? I guess that's what that means in Spanish. El Pollo Loco means the crazy chicken out here.
Okay, yeah, the crazy chicken. All
the
right.
crazy chicken. But, they are, they're going upscale, Tom. They're building these hacienda-style restaurants. If you see the ones that are out here, to be really honest with you, they're older restaurants. They've been around for a while before they went public. But the new ones are really smart looking, and they're everything's brand new. They say that the service is better at the newer ones. They're training the managers better.
Okay.
They've opened up in, let me see, Sacramento. I get all their reports. Sacramento, Vegas. They've got 10 to 20 that they're opening in Houston and in Austin, Texas. They've got some in Arizona they're opening up. So their expansion plans are big. They hired a new guy last week who has a lot of experience in franchises. And so his whole job is to go out to get people like you saying, hey, open up an El Pollo Loco. So he's a franchise expert.
You got to love it. Well, listen, where are you off to this week?
I'm home, but I got a leaderboard thing here. We got about 400 people coming, so I'm working this weekend, too.
But you're home. That's a beautiful thing. Listen, we look forward to speaking to you next Monday, Amy.
Hey, you too. Take it easy, Tom.
Have a great one. Have a safe one. Stay right there, folks. Dow Industrial's down 24. Nasdaq up 8. S&Ps were flat. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials finished down 24, NASDAQ up 8. S&Ps were flat out here. The oil market, no doubt, got hit, took out a B point, took it out with volume. We're trading out at the 78, 17 level. And bottom line is that that little baby looks like it's going to get down to the 75, and more than likely it very well could get into that $70 level. Now, folks, let's go over to our man, Mr. J.J. Kinahan at TD Ameritrade Thinkorswim. And don't forget, every Tuesday right here at TFNN, 12 to 1 Eastern Standard Time, Thinkorswim. TD Ameritrade has an outstanding options program. You can get all the programming at TFNN, folks, right on your cell phone, tfnn.mobi. The live program, starts every day, 8 o'clock in the morning to 6 in the afternoon. JJ, what's going on?
Tommy, how are you, my friend? Always a pleasure to be with you.
And thank you so much. We really appreciate you growling and prowling with us out here.
Yeah, well, unfortunately, Chad's not feeling well today, so he had to take off a bit early, so I'm a poor substitution for him.
No, you're a great substitution. Hey, and talking about substitutions, you know, you got Madden coming into Chicago.
Yeah, it's pretty exciting.
That's got to be great. Yeah.
Although I grew up near Wrigley Field, I was raised right, and I've always been a White Sox fan, but it's pretty exciting for Cubs fans.
Yeah, no doubt, no doubt. So, market-wise, so talk to me, you know, when we take a look at this market, JJ, and I know you've been around for a long time, I mean, this S&P, well, it doesn't matter what we look at. You know, we were at 2019, September 19th. We get down to 1820, and we're back to 2019.
Yeah, you know, if you got hit in the head October 3rd and you came back on October 31st, you'd be like, well, what's the big deal?
Yeah.
The stock market didn't move.
No doubt.
You know, Tommy, what is interesting, though, is you talked about that 2019 level, and I think if you're bullish, you'd really like to see that SPX close above 2020 and get some separation from 2000 because, you know, so many of your folks are so good at charting, the folks who listen to the shows that you do every day, be it gold or options or whatever it is. And one of the things they'll notice on their charts is that 2000 was such a magnet for the SPX.
Yes.
It seems like we traded on 15 to 20 points of it forever. And so, again, if you're bullish, you really want to see us do some separation there.
Yeah, it's such a fact. I was bringing it up in the last hour, JJ. And, folks, it doesn't mean, what you want to see, if they think it's going to go within the next 3 or 4 days, it has to get away from here. Because if it doesn't get away from here, guess what? It's going to get sucked right back down the other side. And that would be strange, JJ, coming into the end of the year. But we know that in the market, it's the same and never the same. That's what it really comes down to.
That's why it's fun every day for us, isn't it, Tommy? We've been doing it so long. Every day is a little bit different.
There's no doubt.
This week in particular is interesting. Again, no matter what product it is you trade, I think this is going to be an interesting week. You have obviously the elections tomorrow evening, and so
yes.
A lot of prognosticators saying that the Republicans will get the Senate. So is that already built into the market? Then one of the things that might be lost on a lot of folks is that we have the Bank of England and the European Union with their version of the Fed
yes.
are both meeting and coming out on Thursday. And then, of course, we have, the granddaddy of them all when it comes to numbers with employment number coming out on Friday morning.
Yeah, big time. When we take a look at, and I know there's so many folks now, JJ, trading these weekly options. I mean, it's pretty cool when the Qs are at $101 and you have an option market that's penny wide.
It's great, Tom, and as you said, the best thing, in my opinion, about options is that you can trade them for the time frame you want. The more liquid ones are penny wide all day, every day. So you can get in, you can get out. It's fantastic. And, although earnings season is finishing up here, one of the great uses of the weekly options, Tom, is in earnings season, because too many times, you and I have both seen so many people do it in the past, they would buy a monthly option and the earnings may not go their way, and maybe yes. the option from $3 to $2. Rather than getting out, they'd hold on till expiration and lose the other $2 slowly. Let's face it, many people have a problem with discipline. If they didn't, we wouldn't have a diet industry. And so what one thing weekly options does, Tommy, is it forces discipline upon people, because if you're wrong, well, it's going away on Friday.
Yeah, which is really great. And when we say penny wide, folks, just so you understand, the 3 Qs in general. So let's say the 3 Qs are trading out here and they're, at $101 out here. What it means is that you can put option positions on, folks, for approximately $1 to $1.20 on either side, whether you're bullish or bearish. So it's not, and what TD Ameritrade Thinkorswim does, and they do a great job of it, is developing and having you understand the strategies so that, if you're bullish, great. A strategy like this may work. You're bearish, just the separate. But it's a defined risk deal, which is just absolutely huge. It's really wild, though, when you actually think they have something at $100, JJ, and you can actually put a position on for $1.
Well, Tom, looking at them as we're talking here, the 102 calls, so the QQQs close today, 101.70. The
yes.
102 calls, so 30 cents out of the money, 50 cents they cost. So to put that in more realistic terms, since every option represents 100 shares, that means if you wanted to go long QQQs, the at-the-monies, you could do so for $500.
Right.
And so one of the nice things about options is that it also, many people don't have as big of an account, and that's fantastic. Everyone starts somewhere. It lets you use your capital in a different way, and so you don't have to use as much capital in any one individual trade, which is one of the really good premises of trading.
There's no doubt. Listen, folks, come over to our website at TFNN. You're going to see the banner on the top, on the side. You can hit that banner, bring up the account. They'll put paper money into it for you. I use it each and every trading day, folks, whether I'm trading options, futures, commodities, or currencies. JJ, you have a great night, safe night, and, of course, we look forward to the show tomorrow.
Always a pleasure, Tom. Thanks for having me on, my friend.
Thanks, man. Okay, have a great one. So 12 noon tomorrow, folks, 12 to 1. And when we're talking about the options in general, folks, so let's go over to the SPY for a second, just so you can see these correlations, because the correlations are pretty intense. The SPY right now is trading at 201.77. You get into those options, folks, and we start taking a look at them. And the bottom line is that you can be trading at the money on a 201, and you're talking about $2.60. So the reality would be, 100 shares, you're talking to 20 grand, or 100 shares, you're talking basically what, $269. That's pretty intense. Laying that baby out, 260 times 100, yeah, 269. So it's pretty amazing in that context, and that's defined risk, and you can't lose any more than you're putting into the option itself, folks, which is absolutely crucial. The XLE had a big problem out here. XLE looks like it's going to go after the swing low, high volume swing low that's out there. XLF. Now, XLF is a little different. XLF came off the highs, got down and does have a high volume low at this 25.55. But first, what it looks like is that the largest weighting structure inside the XLF is Berkshire Hathaway, and it looks like Berkshire Hathaway wants to basically test its high once again. Because if we do take a look at Berkshire Hathaway, this is what you have. On September 19th, we had a high out there that was at a price point of 142.45. You had volume of 9.4 million. Yes, Friday, you came into that with 5.7. You hit the 140, 152, and we're just hanging there. When you hang underneath, now this would be just the other correlation. So now we're hanging right underneath that high. It wants to bang that high out. As to getting away from where we are right now, that's crucial for the S&P. It's crucial for the Dow Industrials, because when you do look at the Dow Industrials, well, we're right there. What we just did today is that you got into the 17,410. We're over the 350 area. 17,350 is the doji, folks, that has been testing. But if you're a bull, you want to get away from that area as fast as possible. Why? Once you get away from an area that we've traded at for so long, and you can make the case that we've traded at this area since July of this year, well, when you break topside, folks, okay, you normally break it. It had the juice when it's going up there, not all the way across all the indices, but it had juice. You get away from it. Once you get away from it, if that S&P gets about 10 points away from it, it will make a leg. That's how that shakes out. The longer you hang around it, you get back inside it, and then there's who knows where it comes out of. But what you have there, once you're back inside the range again, your probability is that you go down the other side of the range. The small caps, the Russell 2000, is still the weak link out here. The Russell itself, the high on the Russell is 1213. We hit 1178. And what the Russell does have, the Russell has 3 lower lows and 3 lower highs, rather, and 2 and 3 lower lows. Yeah, so the Russell, as defined, is in a downtrend, and that is the only indice that, however, is in that downtrend. Dow Industrials closed down 24, Nasdaq up 8, S&P's down $1.50. You stay right there, folks. We're coming right back.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. HLF, Herbalife, just come out with numbers. Herbalife closed at $55.90. That had been up $3.44 for the day. It's down right now, trading at $48.95. And numbers like this, and this has been the battle between these two sharks on Wall Street. Bottom line is that it looks like David Ihon is going to be beating Carl Icahn on this one. So they sales are down 5 to 8%. The estimate was $1.69. They pulled in. Well, no, that fourth quarter estimate was $1.69. They figure they're going to make $1.30 to $1.40. They missed by 6 cents this correlation. When you do look at the short interest, so the short interest is 43%. Big, huge number, of course. There's 91,000 shares outstanding, so that equals 28 million shares a shot, 28.5 million shares a shot. Huge number. When you take a look at Herbalife, too, when we put this on a monthly basis, what you have a high volume high that wants to get tested. That high volume high is at $24.24. And what this has done, now watch what this has done also, folks. The high volume low is the low of December of 2012. The high of that low is $47. Now, once you get into the bar of $47, the further you get into the bar, the higher the probability is you're going to go to the bottom of it. So this will open up tomorrow at the 49.42 area. And we'll see where that goes from there. You talk about a settlement. So check this out. Stryker, okay, which is the huge medical equipment supplier. They're monsters anyway, but you'd have to be monsters because they just did a settlement for their artificial hips. And they were in a court case. In the middle of the court case, they decided they're going to settle this thing out. $1 billion with a B, folks. Pretty amazing when you think that someone can come up with that kind of bread. There's no doubt that that's insurance money, and more than likely it's insurance money and a few other things. But that is a monster number. And that's not even we're not even counting the aspect of what the attorney's fees were and the rest of that. So big number, no doubt. Okay, so tomorrow morning, what do we have? What you have out here is this. Where, as JD was just saying, you have the end of window dressing is basically today and tomorrow. The elections tomorrow. The real key is going to be, is something going to be moving around because of that? What we do have here is that the SPY, the QQQ, the IWM, they're all just laying right above the highs. Now, that's normal, folks, for the day after a high energy day. We've actually not only just had a high energy day, we had a high energy week, or a couple weeks. So in that context, the market really hasn't said anything out here today. What I suspect we're going to be looking at, and what I'm going to be looking at in particular, is what is this dollar going to do? Because what we have had, years ago, the market couldn't stand a high dollar. Bottom line, it looks like the market's digging a high dollar. Why? The dollar went higher, market went higher, they all went higher. The bond market, though, is still screaming that the S&P wants lower price. Bonds have absolutely refused to back off. The way bonds are set up right now, you get the 10-year at 126.09, the 30-year at 141.03. That correlation there is saying that each one of them want to go to their high that was established on the October 15th level. Now, the battle between inflation and deflation is out here. And the correlation is really intriguing because you had Bill Gross come out today saying he thinks that the deflation battle is winning. And the reality is that at this point, really, my general feeling is that you can't tell whether deflation or inflation is running right at this particular point. The reason being is that if you're on the deflation side, which it could be really easy because we had oil coming down, you have the dollar going up. The dollar going up in itself will make commodities less expensive. Deflation in itself is definitely not, even though the food, the commodities themselves, food, wholesale prices have come down, but food has not come down. Rents definitely have not gone down. Depending where you are, rents have gone up. We have the Tiger Real Estate Opportunity Fund. Our rents are going up, and they're not balking at them. And a few of them went up quite a bit and will go up quite a bit. When I say quite a bit, you're talking over 10%. So that there's leeway there, but that number, and between food and your shelter, that's a big number. So in order for bonds to stay low like they are, and we're not in deflation, that is saying that huge amounts of money just want to get their money back. That's how that setup is. And if that's the case, the correlation is that why? Is it the S&P too high, or in fact, all these going to run at the same time? Well, it hasn't happened before. Bonds don't run higher. Well, most of the time they don't run higher with markets running higher. That has to do with the yin and the yang as to where safety is. What are you paying for safety? So we'll see where this shakes out. What you did have out here today is that the UK and the DAX, both of them couldn't hold higher price. The way it looks right now is that both not only didn't get to their highs, they only did a 50% retracement of those highs, came off those, went south today. I expect what you're going to see that they're going to continue going south tomorrow. And if that's the case, then we'll see how our own S&P does. If, in fact, this S&P wants to go back down and test the high volume low, which I expect it does, what you will see where the confirmation will come in is this. The confirmation would come in is that as the S&P gets back inside the range, and the range on the SPY right now is 201.85, so 201.77. So you're basically inside it. You need an expansion of volume on the way down. If you get a contraction of volume on the way down, that just means it's going to basically run to the highs once again. That's the way that baby is set up. If we go over to the 3Qs, we take a look at the 3Qs, same setup in the 3Qs. Your correlation and indication would be, do you get an expansion as it pulls back slightly? And the IWM thus far is continuing to say that it wants lower price. Now, the IWM, of course, has huge amounts of small cap commodity stocks in it, and that's why I suspect flat out with the IWM, it has been so weak. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows, and whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.